How to read a paycheck, understand taxes, deductions and net pay. Each payday brings with it not just a paycheck, but a snapshot of your financial life. While many people simply check their final deposit and move on, learning how to read a paycheck in detail is a vital financial skill. A paycheck is more than a payment. It's a breakdown of your earnings, contributions, and the deductions that impact your take-home income. By understanding the elements of a paycheck, you can better manage your finances, detect possible errors, and make more informed decisions about your income and benefits. Understanding your pay stub. Every paycheck is typically accompanied by a pay stub, either in paper form or as part of your digital payroll portal. This stub includes essential information such as gross pay, deductions, and net pay. It also often contains personal information like your name, employee ID, and pay period dates. The pay stub acts as a mini report card of your earnings and where that money goes before it reaches your bank account. The information might appear complex at first glance, but each section provides valuable insight into your financial situation. Gross pay. Your total earnings before deductions. At the top of your pay stub, you'll find your gross pay. This is the total amount of money you earned before anything was taken out. It includes your regular wages or salary, as well as any overtime, bonuses, commissions, or holiday pay. If you're paid hourly, this section will usually list the number of hours worked and your hourly rate. For salaried employees, it reflects a portion of your annual salary, depending on how often you get paid. It's crucial to verify that your hours and rates are correctly calculated, especially if you work overtime or earn variable income. Taxes. Mandatory government withholdings. The first major reduction from your gross pay will typically be taxes. Depending on where you live and work, these tax deductions may include federal, state, and local taxes. In the United States, every worker is subject to federal income tax. This is calculated based on the details you provide on your W-4 form, including your marital status and number of dependents. If you didn't withhold enough, you could owe money during tax season. State taxes are similar, though some states, like Texas or Florida, have no income tax at all. Additionally, certain cities and counties also deduct local income taxes. Another major deduction under this section is for FICA taxes, which consist of Social Security and Medicare. These taxes are mandatory and fund national programs. Social Security is currently taxed at 6.2% of your wages, up to a wage-based limit set annually by the IRS, while Medicare is taxed at 1.45%. If your income exceeds a certain threshold, such as $200,000, you may also be subject to an additional Medicare surtax of 0.9%. These taxes are split between you and your employer, but only your portion appears on your pay stub. Pre-tax deductions. Lowering your taxable income. One of the smartest ways to reduce your taxable income is through pre-tax deductions. These are amounts taken from your paycheck before taxes are applied, helping you save money while contributing to essential needs. Common pre-tax deductions include health insurance premiums, retirement contributions like 401(k) or 403(b) plans, and health savings account, HSA, or flexible spending account, FSA, contributions. These deductions reduce your gross income and thereby lower the amount of taxes you owe. For instance, if your gross pay is $4,000 and you contribute $400 to a retirement plan and $200 to an HSA, your taxable income becomes $3,400. That's the amount on which your taxes are calculated, not your full gross pay. This is why pre-tax contributions are often considered an effective way to both invest in your future and reduce your tax burden. Post-tax deductions. After-tax obligations and extras. Post-tax deductions are taken out after taxes are calculated. These do not reduce your taxable income but may still be necessary or beneficial. Common post-tax deductions include union dues, charitable contributions, wage garnishments, for unpaid child support or debts, and voluntary insurance policies not covered under pre-tax benefits. Some employers also offer Roth retirement plans, which are funded with post-tax dollars. Unlike pre-tax plans, Roth accounts allow for tax-free withdrawals in retirement. Employer contributions. What you don't see in your pocket. Some pay stubs also show what your employer is contributing to your benefits. These amounts are not taken from your wages and won't affect your net pay, but they are part of your overall compensation. Examples include the employer's share of your health insurance premium, contributions to retirement accounts, such as a 401k match, life insurance, and disability benefits. Year-to-date, YTD, totals, your cumulative earnings and deductions. Another important section of your pay stub is the YTD, or year-to-date, column. This shows your cumulative earnings, taxes, and deductions since the beginning of the calendar year. These figures help you track your income and deductions for budgeting, loan applications, or tax planning. For example, if you're close to hitting the maximum Social Security wage base, your Social Security deductions may stop once you cross that threshold. The YTD summary also makes it easier to prepare for tax season by showing how much has already been paid toward your federal and state income taxes. Net pay, your actual take-home pay. Finally, we arrive at the figure most people care about, net pay, also known as take-home pay. This is the amount you receive after all taxes and deductions have been subtracted from your gross pay. It's the money deposited into your bank account or issued as a check. Net pay is what you should use for budgeting your monthly expenses, savings goals, and other financial planning. For example, if your gross pay is $3,500, and you have $700 in taxes and $300 in combined deductions, your net pay would be $2,500. If your net pay varies from one paycheck to another, examine the changes in deductions or hours worked to understand the cause. Common errors and why you should pay attention. While most employers and payroll systems are accurate, mistakes can and do happen. It's important to review your paycheck regularly to ensure you're being paid correctly. Common errors include incorrect hours worked, inaccurate tax withholding based on outdated W-4 forms, missing bonuses, or misapplied deductions. Catching a payroll error early can save you a lot of hassle down the line. Why understanding your paycheck matters. Many employees go years without truly understanding how their paycheck works. They know what lands in their account, but not why it's less than expected or how their benefits affect their income. However, understanding your paycheck is empowering. It helps you make informed decisions about retirement contributions, healthcare plans, and tax strategies. It allows you to plan for the future, track your financial progress, and ensure that every dollar you earn is accounted for. Thanks for watching. Now that you know how to read your paycheck like a pro, you're one step closer to financial freedom. Don't just work for money, understand it, manage it, and make it work for you. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon so you never miss out on more powerful money tips and financial education content. Want to dive deeper into financial literacy and asset building strategies? Until next time, own your journey, own your future.